Hello and welcome to the week ahead. We've had a very interesting week in the one gone by with a lot of corporate earnings both in the US and in the UK. US ones slightly weaker than what would be enjoyed, and of course we haven't seen any brand new highs in some of the US indices there. UK, same thing goes, with commodity prices under pressure, and we've had some of the mining companies come out in the last week indicating that there should be further to fall. Next week promises more of the same, but a heavier macro calendar, but still a lot of corporate data to look out for. Monday will be the German IFO. Clearly, this will be very important for the euro. We have seen a broad-based rise in the euro against the US dollar, and there is speculation that some of the central banks are actually buying the euro, particularly that of the SNB, in a bid to protect their own currency. So the expectations are for that expectations index to drop from 102 to 101, whereas the business climate reading is expected to fall as well from 107.4 to 106.3. Then US durable goods, always a very interesting metric to watch and often a big dollar mover. That is expected to rise 2.5%, including transportation. Moving on to Tuesday. So Tuesday for my money is probably one of the bigger days of the week. We have the UK GDP and we also have US flash services PMI, often a big leading indicator for US GDP there. The year-on-year figure for the UK is expected to be around 2.7%, possibly a little higher if you look at some of the leading indicators we've seen recently, with the exception of retail sales. That is slightly down from the first quarter annualized number of 2.9%. So again, we'll be watching the sterling crosses for any improvement on that particular number. Anything weaker could very well see the pound languish a little bit further, and the 70 mark against the euro will be something to be watching. It does seem rather anchored around that for the time being. US consumer confidence also out on Tuesday. That is also expected to fall. Generally speaking, you will find that will move in lockstep with some of the US indices. So it's of little surprise, given some of the weakness we've seen of late in the likes of the Dow and the S&P 500, that will more likely fall below the 100 mark, and it could ultimately drag the dollar down a little bit with it. On Wednesday, we have pending home sales in the US, and they're expected to rise 0.9% month on month. Crude inventories for oil, obviously very, very important at the moment. We've seen WTI falling below $50 per barrel. We've also seen the Brent crude contract falling below $55 per barrel. So obviously the supply glut is going to be an important factor here. Anything over and above the expectations that we have already penciled in, and that's around 1.1 million, will ultimately be to the detriment of the oil price, and particularly with the stronger dollar that we've witnessed of late. The FOMC's decision, though, on the Wednesday, there has been very little data out other than what's due out in the first 2 days of next week to give us any clues, or indeed the Fed any further clues as to when we might see some tightening in the rate cycle. But this will still be very closely watched, and we can expect to see a great deal of volatility around some of the dollar crosses and, of course, the US indices as well. Thursday, we have got the Reserve Bank of Australia, and there have been a lot of dovish comments coming from that particular bank lately, and that is of no surprise given the commodity rout that we've seen. But we are looking at multi-year lows for the Aussie against the US dollar at the moment, and in fact it wouldn't necessarily be my trade. It does seem in some respects that we could see a slight bounce against the US dollar. My trade of the week is in fact Euro Aussie, so looking for an actual long position against the Australian dollar, owing to the fact that there does seem to be a good deal of upside in the euro, and of course we are seeing peripheral bond yields that bit lower. So the demand for euro will still be there, but you would expect that the Aussie will be out of favour. So that's my trade of the week. If, of course, we see any sort of extra dovishes from the RBA, that could very well power that bit higher. On Friday, the big thing to watch will be the Eurozone inflation numbers. Obviously, this is something that the ECB will be watching very, very carefully. It's forecast for July to be a rise of 0.2%, and core prices are expected to rise by 0.8 or thereabouts from 0.7 the last time round. Obviously, euro dollar, euro sterling, those are the ones to watch for the time being. There does seem to be a feeling out there that despite the rout in commodities, that inflation expectations are more firmly anchored than they were, which again is helping to underpin the euro despite the fact that we are seeing quantitative easing. Watch very carefully for any move through the 111.50 on the euro dollar. That could very well support a move up towards the 114 level if, of course, the expectations are beaten on that particular metric. That's it for the time being. Thank you for watching the week ahead. Do feel free to sign up for some of our market analysis and commentary on our website, LCG. Thank you.